Raising money from the bank for your business can be stressful, but it doesn't have to be. Today, we are joined by Mrs. Adwoa Anaba, a seasoned banker with expertise in credit, who is going to talk about what to expect from the banks when you are trying to raise money or loans from the bank for your business. Welcome to Evolve Business. My name is Boatema. Hello, Adwoa, and welcome again to Evolve Business.
Hello, Boatema. It's good to be here.
So tell us, Adwoa, what should a business expect from a bank when they are trying to raise money from their business from a bank through a loan?
Thank you for the question, Boatema. It feels good to be here. First and foremost, I want us to demystify the notion that banks are there to prosecute businesses. Absolutely not. The banks look out for some things, and banks thrive on documentation. So for a business, the first thing I'd say is you have to understand your business. You have to understand the nature of your business, how your business works, the sector in which you operate. Okay. When you understand your business, you put the bank in a better position to assist you. Okay. And then the bank also looks at your historical financials. The historical financials tells the bank your performance in the past, the present, your future projections, and then it tells and informs the bank if you'll be able to raise funds to pay whichever loan that will be given to you.
So when you say historical financials, what do you mean? Okay.
When we talk about historical financials, we're just looking at the performance of the business, basically, for the layman. I don't want us to go into technicalities, but we all know what goes into a financial statement. What goes into, we talk about profit and loss or income statement, balance sheets, and then we talk about cash flow.
Right.
So basically, what the historical financial does is to tell the bank how the business has performed in the past. And then the future projections, that tells the bank if you'll be able to pay or not, or if the business is viable or not. Mind you, this is depositors' funds we are lending, and we want to ensure that repayment is assured.
Right. I like what you just said, that the banks thrive on documentation. So if a business owner does not keep records, their financial records properly, there's no way they are going to be able to secure a bank, because a bank is moved by what they see, right?
Not only by what they see, but reality on the ground. You see, sometimes seeing can be deceptive. You understand? It's not just about what they see. You have to make sure that your financials is showing or giving the bank the true picture, true reflection of your business, so that they can advise properly. If you fail to do that, they might give you something that you don't need, or you might not end up not getting it at all. So it is very crucial that you are very honest and open with your documentation.
Right. I mean, talking to you, it is comforting to know that the banks are also interested in dealing and working with businesses to grow their business by providing funding. However, they also have to report to their depositors. Right. Okay. So are you saying that when a business is trying to secure a loan from the bank and they ask them to go and present this document or that document, a lot of the times, are the banks on a fishing expedition? What are they looking for?
The banks are looking for genuine people doing genuine business to support them. Mind you, one of the core mandates of the bank is to lend. You understand? So you have to make sure that you are keeping your books. You can't run a business in limbo. That is why a lot of businesses struggle, because they fail to keep their books in order. Like I said, You see them saying, oh, I have a business. Oh, I do this. Oh, I do that. But they are not running their accounts. They are not keeping records. They don't have any financials. And it's difficult for a bank to assist you, because you have to ask yourself, if I were to be the bank, will I lend money to me? So you have to convince yourself first and foremost before you even come to the bank. If you can't convince yourself, I'm not sure you'll be able to convince the bank. Then ask yourself, if it was your money, would you give it to you?
Right. Well understood. So apart from the historical financials, what else does the bank look out for?
The bank looks at your ability to repay. Very crucial. Very, very crucial. You see, some people come with a request and you go into it, you realize that they don't even need it. And if you give them that, they will not be able to repay. So repayment is key, because they are giving you deposited funds, and it is our aim that after giving you the funds, you'll be able to repay. We'll give you another one, you repay, and we will establish a very wonderful working relationship. So repayment is very, very, very crucial. For ability to pay, it's very, very crucial. They also look at your credit history. How have you performed in the past? If you have loans, have you been paying? If you have facilities, how do you repay your facilities?
Mm-hmm.
You understand? And we also look at one very key thing: ability and willingness to pay. Some people have the ability but are unwilling to pay. So these are basically some of the things that the banks look at.
Right. We also a lot of the times hear of security. What is the role of security in this discussion?
You see, people think that banks lend against security. Unfortunately, no. Banks lend against cash flow and not security. They fall back on security when everything finally, sometimes there are unforeseen circumstances. So finally, it's the last fallback. It's the last fallback. So banks do not lend against security. They lend against cash flow. So security is crucial, and banks lend against cash flow. Monies that come, when you say cash flow, monies that come into your accounts, out of your accounts. It also tells the bank your liquidity. When you say liquidity, simply your ability to service your debt within the shortest possible time. So it's basically not only centered on security, it's mostly centered on cash flow. Banks lend against cash flow and not security. So the security is the fallback when every other avenue fails.
Right. And for us lawyers, a lot of the time we also deal with facility letters. We see things like purpose of the loan, tenor. Do you want to speak on those ones as well, and anything else?
I think we hit on it briefly, but the purpose of a loan is very crucial. You see, some people come for loans and tell you that, oh, I want to use it for me. You realize that we use it for you. So the purpose for taking the loan is very crucial to the bank. We want to make sure that any form of diversion is mitigated, and that you are using the loan for the intended purpose. It is very crucial. See, that is why it is always put in the offer, purpose, because it's through the purpose that the person will be able to repay. Because if the person does not use the funds for the intended purpose, then there will be no repayments.
That's right.
And then tenor of the facility is also very crucial. When you talk about tenor, it's just about duration of the facility. I think I said this in my opening statements, that when you understand your business, you put the bank in a better position to assist you. When you understand the nature, the way your business is, the dynamics of your business. Like, I'll give a typical example. Like, if you are a contractor, most contractors don't receive payments on monthly basis.
That's right.
And they are taking a contract, so it takes time for the funds to come in. So tenor, if I'm structuring like a loan for such a contractor, obviously I'm not going to put in monthly
payments.
repayments. I'm going to look at how monies come into his account and then structure the tenor accordingly. Because if the bank gives you a tenor lesser than what you need, your business might not survive and you'll be unable to service the loan. Or if they give you a tenor that is also too much for your facility, it might also not help you in the long run. So these two are very crucial. The banks pay absolute attention to that.
If the bank knows that they thrive on documentation, why doesn't the bank make it easy on the first meeting or at the first meeting? Why doesn't the bank just give these businesses some sort of a checklist of everything that is required, so that we know that once I've met everything that is required in this checklist, you are definitely, if the bank is convinced, they are definitely going to give us this loan for the purposes of our business. Because sometimes it seems like you bring one document and you are asked to bring a second or third. Why does it seem that way?
Well, I think it seems that way because maybe, I don't know the scenario that you've experienced, or maybe the relationship is not being managed well. Because if the relationship is being managed well, that communication gap shouldn't even exist. Because the banks have checklists that they use. There's no bank without a checklist. They talk to you, and then you tell them what you want, and they talk to you, they tell you the requirements. You see, the challenges with a lot of businesses is that they don't keep their books. They don't run their accounts. You see, they don't keep their financials. So there's nothing for the bank to actually thrive on or look at to even give you a loan. Because ask yourself, like I said, if it was you, would you give that loan to you? Because it is deposited funds we are lending, so repayment should be assured.
So I've actually had a particular experience in which a business I was dealing with had gone to the bank for a loan, provided all the requisite documentation. They had even given a security for the loan, and actually entered into or signed an offer letter from the bank. But then this person or this business owners had still not received or heard anything from the bank. I know, is this the norm, or as you're saying, it depends on how the relationship is being managed?
Well, I guess that is not the norm from what I know, because there is a liaison between the customer and then the bank. That will be the relationship officer. So whatever credit decision has been taken at credit committee or at whichever level, they should come back and communicate same to the customer. I don't know what was in the offer letter, but then every offer letter, it has the purpose, it has the tenor, it has conditions precedent to draw down. So what were the conditions precedent to draw down on the offer letter? Was the customer able to meet the conditions precedent to draw down? I think we should go further and get more information from this person so that we'll be in a better position to advise.
Right. Now that you've gone into conditions precedent to draw down, what are they? Can you give us some examples?
Yes. When a bank gives you an offer letter, there are terms and conditions of whichever facility has been given you. So when we say conditions precedent to draw down, the banks put in certain conditions that you have to meet before they finally give you the money. So it could be that you have to bring a board resolution, you have to bring a joint and several. If it is cash that you bought as security, you have to bring a letter of lien and set off. Maybe if it's an enterprise, they will ask you to bring a personal guarantee, and then the list goes on and on based on the structure of the facility. So basically, condition precedents are conditions that have been put on the offer letter for you to meet before the loan is given to you.
A lot of businesses are watching us today, and they would like to hear from you. What advice do you have for them if they intend to raise some form of capital or money for their business through bank loans?
You have to understand the the nature of your business and the sector in which you operate. When you understand it, you put the bank in a better position to help you. I'll give a typical example. You sell provisions. Those are fast-moving consumables. So from where I sit, I'd advise that you take an overdraft because a loan might be too expensive for you looking at the nature of your business. Because you see money daily. You sell, money comes in, you go for items. So it's a daily activity. So I'd advise you go for an overdraft because a loan will be too expensive. A loan will be paid at the end of the month and interest will be charged at the end of the month. But with an overdraft, as and when you take, then interest is charged on it, which will be better for you and then enable you grow your business. So basically, I would advise all businesses to understand their business, the sector in which they operate, and then bookkeeping is very crucial. Make sure you are keeping your books very well, you are operating your accounts also very well, and talk to your bankers. They are there to help. One of the core mandates of banks is to lend. But then the other thing is that we also want to make sure that whatever funds we're giving out is being repaid. The banks are actually there to help you. So please feel free to go there, talk to them, and I'm sure they'll be willing and ready to assist you in any way possible.
Thank you very much, Adwoa. This has been so resourceful, and I believe our viewers have learned a lot from you tonight. Viewers, you have heard Adwoa. If you are interested in taking a loan from the bank, remember that the banker-customer relationship is a two-way street like any other relationship. You have to fulfill your part in order for the bank to fulfill their part. Some of the things Adwoa has said, make sure that you know and understand your business. Make sure that you have a good credit history. You keep proper books. You couldn't have said it anymore. Thank you for joining us on Evolve Business with Boatema tonight. Special thanks goes to Chic by Siva for this lovely outfit. Hello, my name is Boatema. Thank you for joining us on Evolve Business with Boatema. Subscribe for exclusive full episodes of Evolve Business with Boatema.